Welcome and thank you for joining us for the Sharon Partners quarterly market update for quarter ended September 2022. As always, I'm joined by Dr. Steve Garth, who sits on our investment committee to give us a little bit more insight about what's happening. Steve, it's been a wild ride. Yesterday, I know the markets had a big rally. What can you tell us about what's going on in Australia?
Right, Kim. Well, look, let's have a look at this chart. In fact, yesterday wasn't the only rally we've seen. It seems the whole of the year has all been about the market going down, and then there's a rally, and then the market goes down, and then another rally. It might surprise viewers to know that, in fact, in this quarter we're talking about, the Australian market's got a positive return for the quarter. It's pretty small, but it's still a positive for the quarter. Of course, for the whole year, we are down about 10%. Now, when you look at the quarter, why is there a positive return? It's one of those market rallies started in about mid-June and went all the way through until the end of August. So it's really only been in the last 2 weeks that we've seen the market fall a lot. And as you correctly said, Kim, with the RBA decision yesterday, we're recording this on Wednesday, and yesterday the RBA said rates are going to go up surprisingly only by 25 pips, and the market thought, woohoo, and the market's taken off. We don't know what's going to happen tomorrow, but today's a good day.
And what's happening internationally, Steve?
Right, well, Australia is actually doing better than most international markets, and so if you're in a diversified portfolio, you've probably got some international shares, and you can see that they're also down around 15%. That's year to date. They are again up for the quarter, but emerging markets, they're really in bad shape. They're down closer to 18% year to date.
And what is it about emerging markets that's dragging it down, Steve?
So the biggest influence on the emerging markets is China. China makes up about 30% of the emerging markets, and they've been having a tough time economically for quite a while. Property development has been in a slump. That's a big factor in the Chinese economy. And then they've had a zero COVID policy, which has really brought things to a halt as well.
And Steve, we spent the earlier quarters this year talking about bonds. How are they faring at the moment?
We should go to the next question, Kim. Bonds have had a really tough year. In fact, people would say it's the worst year in bonds on record. If I show you this chart, then it shows the yield of Australian bonds and US government bonds, and you can see it's been steadily climbing over the year. Now, when yields go up, bond prices go down, and so year to date, again, Australian bonds down by about 10%. Global bonds that are hedged back to Aussie dollars, they're down by about 13%, and it's all because of these yields that are rising, and yields are rising because inflation is rampant around the world, and central banks are putting up interest rates to try to dampen inflation, and rising yields are a consequence of that.
Steve, I know we're not in the business of making predictions, but when can we expect this to end?
Yeah, that's a great question, Kim. How much further will interest rates go up? And I'm not much good at predicting either, but we do have sort of a market view on that. In fact, the market's saying it hasn't got a lot more to go. So we're getting sort of close to the end. And in a way, Kim, the 25 basis point raised by the Reserve Bank yesterday, again, it shocked the market, but it's a sign that maybe that things aren't that bad. Maybe the RBA is seeing that inflation is starting to moderate, and therefore they can slow down or at least take a breather on these interest rates. So we're not expecting interest rates to go that much higher.
Time will tell, I suppose.
Time will tell.
And Steve, a good reminder that the Sharon Partners investment philosophy is always to have a well-diversified portfolio to take you through whatever the future has to hold for us.
That's right, Kim. Keep in mind that what we're seeing at the moment, it's not pleasant. I know as an investor it hurts, but it's just a regular part of investing. These sort of downturns are part of a normal economic cycle, and that is what we're seeing at the moment.
And I think it's helpful to remember. Thank you so much for joining us, and we look forward to seeing you next quarter.